I'm David Frazier, aka the Market Monk. Well, stocks moved higher again today on Monday, May 12th, with the S&P 500 index, the Dow Jones Industrial Average, and the Dow Jones Transportation Average all making new highs today, new all-time highs. Stocks also moved higher in Brazil, in Europe today, and the most recent readings on the New York Stock Exchange cumulative advanced decline line, that is the number of stocks moving up in price versus those moving down in price, also moved higher today, and the percentage of stocks that trade on the New York Stock Exchange also rose today. Now, those of you that have been watching this relatively new Market Monk show over the past 6 weeks know that this comes to absolutely no surprise at all to me, as I've been telling you for weeks now that my research indicated that stock prices in general were going to move higher during the weeks and months ahead. And my research has continued to indicate that. Now, we did have a recent sell-off over the past, I guess this goes back 2 to 3 months now, in storage stocks, and I've talked about that quite a bit too, the sell-off in storage stocks, that is stocks of companies whose prices are based solely upon their potential earnings and the media's coverage of those stocks. Those are storage stocks, but that didn't surprise me either. I mean, it's very difficult to know when those types of stocks will move lower. That is when speculators and investors in those stocks will wake up and realize that, gee, these companies might not ever make a profit, and they begin to sell them. But that did start to happen a few months ago, and but it looks like that's nearing an end for some of those stocks. Stocks that were way overpriced, that do have earnings, and that look as if they'll grow their earnings at a relatively fast rate over the next few years. Those stocks of those types of companies appear to be bottoming out here. However, there are numerous other story stocks, stocks such as Tesla, Twitter, Athena Health, Palo Alto Networks, that have never made a profit. And I'm sorry, on Athena Networks, I take that back. They have made a profit, but they're still way overpriced. But at least Tesla and Twitter and Palo Alto Networks are stocks of companies that have never made a profit and look as if they might not ever make a profit. And I wouldn't be surprised if those stocks continue to move lower. Now, let's move forward and get into what this daily show is really all about, and that is what we strive to do on our daily Market Monk show is to tell you everything that you need to know and nothing more regarding factors and developments that we expect to affect the value of your financial market portfolio. So sometimes this show will be only a few minutes in length, and sometimes it might be 15 or 20 minutes in length. It's based on whether or not we have something important to cover for today. And we don't have much to cover today. Stocks appear to be to have rebounded from oversold levels, and I'm thinking that maybe some folks are realizing or expecting, I guess is what I should say, the same thing that I'm expecting regarding some economic releases that are due out later this week. For example, retail sales figures for the month of April are due out tomorrow on Tuesday. Industrial production figures are due out on Thursday, and figures regarding the construction of new homes for the month of April are due out on Friday. And my research indicates that Wall Street economists are underestimating the numbers that we'll get regarding those economic series, that they're underestimating retail sales for the month of April, that they're underestimating the amount of industrial output for the month of April, and that they're underestimating the number of new homes that we're constructing. We'll find out. I don't know. But I think we're going to see better numbers than what Wall Street's estimating. And those will be some very, very important numbers. Now, having said that, well, in the past few minutes, I've talked as if I've gotten everything right the past 6 weeks regarding my forecast for stock prices in general. And I have been mostly right the past 6 weeks. But I do not want to give you the impression whatsoever that I am always right. Quite the contrary, I'm not always right. I make mistakes like anyone else that participates in the financial markets. I mean, for example, approximately 6 months during 2013, I had subscribers in one of our model portfolios entirely in cash and missed out on some big gains. But I've been right a lot more often than I've been wrong over the past 15 years. And if you go to our internet website, if you're not already there, at www.themarketmonk.com, look at the gold-colored menu bar, look for the menu item entitled Performance, and there's a drop-down for that shows historical forecast way back to the year 2002, since I've been documenting my forecast regarding the direction of worldwide economies and stock prices. I've been right a lot more often than I've been wrong. And that's something, those documented forecasts and comments is something that you rarely get out of the vast majority of our competitors. You'll also notice at that menu bar for the performance menu item that we show our entire documented track record for our newsletter recommendations. We don't show our open recommendations because people pay to receive those, but we show any closed recommendations. We're very, very transparent, and that's also something that the vast majority of our competitors never want you to see. You know, they'll lead you to believe how they have great performance, and if you read what they say very carefully, they do not give their actual specific performance results. That is the vast majority. Some do. I mean, there are some very good newsletters that I've followed and read for many years that are very, very good, but boy, it's not more than a handful. Most of these publications, they mislead people tremendously, and you'll never get a documented performance record from them. Why? Because that's the last thing they want you to see. If they show you that, you'll never subscribe to their services. Now, having said that, and I don't want to talk too much about trying to sell you something, but you know, we do put up this show for free, and we do need to make some money along the way. I encourage those of you that are just now watching this show for the first time, or maybe have watched a few shows but are not subscribers to any of our publications. I encourage you to try us out. You can do so for free for all of our publications, for absolutely free, without even needing to put in any credit card information, just your name and your email address. You can subscribe for free for a period of 60 days. And for our new 10% in 30 days short-term trading service, we're actually offering that service at this time for free, and will not send you any notice to bill you or to try to get you to pay for a subscription until you have received at least 3 profitable trading recommendations from us. So I encourage you to try one of those services out. I mean, it doesn't cost you anything. Okay, enough about that. Let me look here, see if I've missed anything on what I wanted to go over today. I don't think I have. So I'm going to wrap it up there. I continue to expect stock prices in general, in most parts of the world, to move higher, to trend higher during the months ahead, and to end the year up substantially higher than their current levels. So that's all I have to say for today. I thank you for watching and listening, and I'll speak with you again tomorrow.